The market continues to become more and more dull, very slow day. One strategy in the Nasdaq, 5 strategies in the S&P, up 500 on the 250K portfolio, up 80 on the 50K portfolio, up on the week, month, and year. Let's look at the market and the trades on the day. This becomes a stop running type market from a volatility perspective. And so all those 0 DTE options that became popular to buy out of the money calls or out of the money puts on the same day for a big move have been expiring pretty much worthless because there have not been any big moves. And so kind of a stop run on volatility, the way you see this VIX drop to I guess 15 or 16 or 18 month lows, and you can just see it just plummeting. It hit a low today of 16.17 and closed at 16.46. Here is the S&P. We've been looking at the Nasdaq. The Nasdaq is slightly down from its close on March 31st, and you see the S&P, the close is right here. So it's slightly up, maybe a one-day gain from its March 31st close, while the Nasdaq is probably relative to its close just a little bit lower. Let's look at the Nasdaq. You can just see the narrow sideways range. It has not done anything significant. And so let's look at the Nasdaq so we can compare it. And the Nasdaq, the close is right here, and the current price is right here. So we have Tesla and IBM earnings coming out right now. Tesla is down, IBM is up, and after hours on those earnings, and the market is still kind of range bound. No big moves based on earnings today yet so far. One way to look at this is to look at the VIX, the channel that was made in the VIX from the March the 29th. You had this channel. We've talked about this before in the stock indexes. And so you make a sideways pattern, and you break out on one side, and then you go to the other side. Or you break out on this side, and then you go to this side. And so we just see a shake-up in the VIX. Potentially what you're seeing is a shake-up in the VIX, to where the VIX goes down and then up. It could have gone up and then down, but there's just a shake-up in the VIX. And so right now, with the VIX going down, there's not much price movement, and we continue to think that because the market is up and sideways and VIX is dropping, that there's a breakout to the upside. But you also have to consider the potential for the VIX to then surge and the market to drop. And the catalyst is difficult to know. We have earnings season right now, but we trade the long and the short side, and right now we are up on the week. So if you're trading 0 DTEs, it's been challenging, and the market has a way of trading against the retail trader, popular strategies by retail traders. So the 0 DTEs became popular, and then the VIX got crushed. And so that's what's going on in the markets. A momentum reversal. Only trade in the Nasdaq today, up 795. It's been a good strategy lately, capturing some winning trades here. It caught these trades last week. It had a small short trade there, a good short trade here, good long trade here. This was last Friday, and today on Wednesday, just a small long trade on this. And so just one trade on the Nasdaq, 5 trades on the S&P. We have some active counter trend strategies. Tick fader, 2 days in a row it's up. Tick count trend, 2 days in a row it's up. Momentum reversal also up. Very small gains. These are very small gains, plus 375. Tick count trend plus 125. Momentum reversal up 162.50. And then open chop lost on the day minus 412.50. And tick chop lost minus 512.50. So chopper strategies lost 2 days in a row. Some of these longer term reversal and counter trend strategies were up. And so once again, these are the trades on the day, not an uneventful market, but up on the day and up on the week, month, and year. And so we continue to look for a market to move a little more, or some additional strategies to trade that work more like this. These are just small gains right here, testing these on Nasdaq and S&Ps with different parameter sets. And so continue to look for more counter trend strategies, or for a market to eventually break out and move. And I believe it will move more than it's moving now. Maybe not to the all-time high volatility. I want to show you one more thing. This is the monthly NYSE tick going back 20 years. And what's interesting is you saw an expansion in the monthly ranges. Highest monthly ranges ever were in 2022, even more so than during the pandemic. This was the pandemic ranges right here, and those were even bigger in 2022. And since that, you've seen it diverge. So it's diverging. Let me erase this and start over, and so you can see the divergence a little better. And so you see the expansion, and then contraction, and expansion to here, and contraction. You can see so far April has a very low range, plus 1500. The low side is down here about minus 1200, and it's one of the lowest ranges we've seen in a long time. If it stays here, we still have the rest of the month to trade. So that is another thing I was looking at, is the monthly range on the NYSE tick and how it is contracting. And here are the results on the day for Wednesday, April the 19th, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.